What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol QQQ, which of course is the ETF for the NASDAQ 100. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this is a market we watch extremely closely, so we already have our chart marked up, and I've got some solid thoughts for you. In terms of what's going on here, we did certainly break out of this 5-day balance that we were stuck in to the upside. Notice kind of right where we topped out today at that area of resistance we talked about in the weekly watch list video from Sunday, right? You can see that was the dead cat bounce high, and that's originally where we started hitting our head against, and obviously into the last 30-minute bar, we got a push higher on some solid volume, I might add. So things are looking up here. We're breaking out of the range, and technically what we would expect is a doubling of that range. We kind of hit that target, and then we'll monitor for continuation. So that is the deal right now inside of the QQQ. We are monitoring for continuation. Do keep in mind the big bad 200 SMA, the green line, is looming right overhead, and then 369 is the next area of resistance to really recapture, coming from that area of support. Lower high was produced, right? And then that's where the flush and the selling really accelerated from. So 369, the next major structural area to be paying attention to, of course, with that 200 SMA baked in there as well. What you don't want to see happen at this point in time is a retracement back down into this range. That would put into play a look above and fail. And technically speaking, the target should be the bottom end, closer to 341.82. Again, the daily structure and what has printed here would not suggest that. I'm just talking about scenarios to be mindful of. The 30-minute, again, you can start to look at this a number of ways. It probably looks better on like a 4-hour or a 1-hour chart for a double bottom, but here's your neckline. It's essentially the top end of the balance, right? It's almost the same thing. You get the gist. We need to stay above 353.89, call it 354 for round number's sake. Let's quickly take out the Fibonacci's to get a sense for where our 38.2 pullback could occur. We'll go in from the low all the way to the high, and you'll notice that it's the exact low from the last, or well, really the last pullback on the day. I was going to say the last 30-minute bar, but obviously that's the green one. The second to last 30-minute bar, you get the gist. That's at 359 even, okay? So as long as we hold up above that, that's like the bull's paradise, right? As long as we're above that number, fine, bull flag consolidation happens here. Breakouts hopefully take us at least to the daily 200, if not the back test of 369. That would be the bullish continuation move that we're monitoring for. Your first heads up that maybe things are turning back around is if that level breaks. Oops, we're going to re-highlight that at 359. If that level breaks, again, your line in the sand, the must hold area, 354 in the QQQ. If that goes down to the bottom end of the range, as I've pointed out now a number of times, doesn't strike me or look like a likely possibility as of right now, but be open to anything in this extremely volatile marketplace. That's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.